Welcome back to the channel. I hope all of you are having a great day. So today I was inclined to make a video on the Wyckoff Accumulation Schematic, which if you've ever heard of it, you probably know what I'm talking about, but if not, trust me, you do not want to miss this video. And I'm going to compare it on the weekly and the daily chart of Bitcoin. We're going to look at the schematic, the very similar price action, and what the schematic has to show, what it actually means for price, and then we're going to go into a little bit of a deep dive and some short technicals towards the end of the video. But again, as always, timestamps are down below for you guys' convenience, and also make sure to go check out our weekly newsletter where we talk about this type of stuff in a little bit more detail in terms of the charts and the technicals and data, and the link to that will be in the description down below. Alright, so the first thing that I want to get into is the Wyckoff Accumulation Schematic, which if you've never heard of it, we're going to go into a little bit of a background behind it, and then we're going to go into the charts to show you guys the insane similarities between them and what it could actually mean for Bitcoin's price. So I'm not going to go into the history of who Wyckoff was, but basically he was a very smart guy in the stock market and realized that psychological and institutional demand and supply basically drive these markets, as they are human, so they have emotions, and they also have a lot of money, which moves the markets. But basically, to put it simply, there are really four phases in the market. You have an accumulation area where everything is, either oversold or everything's getting accumulated. Then you have that push up, and then you have the opposite, which is a distribution area where everything's overbought, the bull market tops, stuff like that, and then you have your markdown or your sell-off. Well, just for reference, there are actually two different schematics. We're going to be looking at the second accumulation schematic. The first one is exactly the same. The only difference is that during, this second push down, there's actually another further push to the downside. But until we actually get to that point, we're just going to look at this one to keep things a little bit more simple. But we're going to be referencing this schematic, so if you want, we're going to flip back and through the schematic and the Bitcoin price. But as of right now, just take a mental shot and then I'll kind of walk you guys through this. So the first chart I wanted to pull up was the weekly on Bitcoin, and then we're going to jump into the daily, which I think is a little bit more of an accurate depiction. So the first thing that we have is obviously you need your markdown. This is after a bull market, and now you are starting to see your accumulation area, which I think is the phase that we are currently entering. Now this is obviously going to be a longer time frame because it is on the weekly, and each candlestick represents a week. Basically what we have here is we need our preliminary support, which on the weekly time frame can be argued it can either be this, which I think is a little bit more obvious, or it could be this downturn. But for the sake of this video, let's just put it here, and the preliminary support will be right around $36,000. And just like the chart showed, the most important thing that you need in here is the seller's climax. This is the lowest point, or the first bottom in terms of the schematic, which again could be right here. And I think it's pretty easy to argue that, right? We have a preliminary support, and then we go even lower with a very strong markdown, and then we have our seller's climax. Then what you get is an automatic rally, basically something where there's a lot of support, there's a lot of buying resistance at the bottom, and so then the markets go up. Now the one thing that I want to kind of hone in here is that there are four phases. Phase A is basically your markdown. Phase B is your second or your longest phase. That's really where all the accumulation happens. That's where a lot of pain is felt by these investors, because phase A is just your markdown. Phase B takes the longest as you're consolidating back and forth, right? You're making new highs and then new lows. So it's very hard for day traders especially, but investors to go through this phase. And essentially that's kind of the whole point of this, institutions trying to shake out people to get the best possible price for themselves. Now the automatic rally is something that should go up. And if we take a look back at the chart, you can see that the automatic rally almost goes back to the preliminary support. So if that is true, then what we should be seeing is that maybe Bitcoin can come back to around the $33,000, $36,000 resistance level right around here, kind of going off the weekly. Once we go in the daily, it's going to be a little bit more realistic in terms of price action and movements, but we're just going to go with that for now. So what we've seen is that we've seen the seller's climax, and we really haven't seen that automatic rally yet. Maybe we have, maybe this is the automatic rally, who really knows? But basically what we could see is maybe a push back to the upside around 30,000, maybe 36,000, anywhere in between there. And so what would have to happen is that would be our automatic rally, on the weekly time frame. And then what we would need is a second test, something just to come down to make it look like market structure is turning bullish. Now that you have your automatic rally and second test, that is when you finally enter phase B. Now this is really where a lot of people get messed up, because you make a new higher high and it looks like you are actually uptrending in the markets. And so if that was true, maybe we do have our automatic rally come to around, let's say 25, 30,000. We have our secondary test, and then right here is that push up to around 36,000, maybe 35,000, but really back to this preliminary support somewhere right around this area. And then what we have is we have the market start to turn down. And this is when the seller's climax really comes into play, because this is when the seller's climax gets taken out. As you can see here, once you make your new high, what happens is typically the market just continues to fall and the seller's climax actually gets taken out. And a lot of sellers or stop losses or investors start to sell at this point because they thought they were uptrending. You get a lot of buyers trapped in here, and then the market starts to move down. And so essentially what it would look like on the charts is, something like this, where we do take out that low, maybe come down to the lows of anywhere between 17,000 and 12,000, right around in this area. And then what you kind of get is just more consolidation in phase B. And again, if we go over, phase C is really no different. It just starts to trend upwards a little bit. And then going back to the schematic, phase C again is just more consolidation. And phase D is really when you start to get kind of that rally back to the upside, where you start to make higher highs and higher lows like you did over here in phase B. But this time it's an actual uptrend. And then what you could obviously get is something like this, and that's when the bull market. Now in terms of time frame, I did also mark these as possibilities, maybe somewhere where we begin phase B right around the end of 2022, beginning of 2023, and then phase B really does take the longest, so it might take a lot of 2023. It might take more than half the year. It might take 3/4 of the year. Who really knows? But in terms of the weekly, this could drag itself out and we could get some rapid price swings in terms of, the seller or the automatic rally might go to 30,000. Maybe that second higher high in the automatic rally goes to 35,000. And then we drop all the way back to sub 15,000. These are all possibilities, not saying it's going to happen, but it's important to take a look at this stuff and ask yourself, can this happen? Now, taking a look at the daily chart, maybe something a little bit more realistic, or at least what I like to tell myself, because in terms of price swings and time taken, I think it's a little bit more practical. But again, the weekly chart may actually be the thing that happens. But if we take a look at the daily, it's a little bit more clear cut and understandable. So when we take a look, again, we're in our markdown, we're pushing down in the markets. And the first thing we get, which is a little bit more clear, is this preliminary support, which happens to be at $28,000 right around here, which is good. So then what we have is, again, our seller's climax, our lowest point, our first lowest point in the markdown. And then what we have is our automatic rally, right? We have our seller's climax, and then we have that rejection of the support where there's a ton of buyers, there's buying resistance right around this area, and then the market gets bought up in this automatic rally. Then you get your second test in phase A. This is the important part. So you get your second test where it doesn't break the seller's climax, it just creates more support and more confidence that this is not going to be broken. Now, an important thing with this is that in a couple days, inflation comes out. The inflation numbers will come out August 13th, which is just in 2 days. And typically, again, remember, in phase A, you have your automatic rally, your higher low, and then you get your higher high right around to your preliminary support. So does Bitcoin have the chance to possibly move up from this point to 28,000, 46%? Very unlikely, but if it does break above this high right around here, that's only 30%. So possibility, again, very unlikely, but if this is following the schematic, you do need a move that does influence and kind of trick a lot of retail traders into thinking that, hey, we just had a 30% move in Bitcoin. We're past our resistance. We're back at our, resistance or preliminary support of close to 30K. Is this the rally? Are we finally done? Is Bitcoin finally being, accepted as the gold standard? So again, it has to really elicit a lot of emotion from people. So if this does happen, maybe we do get that higher high, break above here, and get anywhere in between 28 and 25,000. And then again, the most important part right now is that we need to break the seller's climax. And this is typically what happens, is that you start to get markdowns like this, and then you get below $17,500. Again, anywhere in between that range. It could go as low as 12,000, 10,000, 5,000. We really don't know, but I think realistically anywhere between 17 and 12 is kind of my accumulation area. And then from here is kind of when we consolidate. Again, phase C does nothing, and then we get higher highs and higher highs. So kind of looking at the schematic, again, time frame wise, maybe this is something a little bit more realistic. Maybe the end of, let's say, 2022 and the first couple of months of 2023 is mainly that phase B area. Could be, I don't know. But one thing I do know is that if we do get kind of an automatic rally where we make a higher high, I would not be convinced that we are entering the bull market and we're going to see an uptrend in the market. I could see it more as a playoff for the Wyckoff Accumulation Schematic. And then what I would be expecting is that secondary test in phase B, where we do break below these lows. And who knows, maybe this doesn't happen, maybe none of this happens, but it is important to take a look at possibilities, overlay them on your charts, take a deeper dive into them, and see what could possibly happen. But those are kind of my two accumulation schematics that I wanted to show you guys on the weekly, on the daily. You guys in the comments, let me know, what do you think is more probable? Do you think this is even probable for the accumulation schematic, or is it just something else that we're completely missing? Now, the last thing I want to talk about before I let you guys go is the inflation reports coming out on Thursday, October 13th. Now, the first thing is normal inflation. This is mainly what the people look at. And as you can see, obviously inflation has been going up. We hit our highest rate of 9.1% inflation. And since the last 2 months, we have gone down a considerable amount, around 0.8%. Now, it's going to be important to see what September brings us in terms of numbers, because if it's lower, that is giving confidence to the Fed that, hey, our raising rates are working and we should continue to do them so we can keep pushing inflation down. Because if we looked back a year, October of 2021, we were still at a 6.2% inflation, which is still considerable, which is not what they want to be at. They want to be below that mark. So again, it could take time for all of this to fall, especially if it's falling at the rate of, like 0.4%, 0.3%. But if it starts to go up, that is definitely not good for the Fed, because then it's telling them that inflation is going to be a little bit more sticky and we could have a problem on our hands. And again, taking a look at core inflation, this is what the Fed looks at. As you can see, the highest point was 6.5%. Then we started to downtrend, which is really good. And then in August, we rose all the way back to 6.3%. So if we have another rise for them, this is what they really care about. If we go anywhere above 6.3%, that's going to give them more incentive to be a little bit more aggressive in terms of raising rates, maybe by 75 basis points. Very unlikely, but maybe by 100. Who knows? But as far as unemployment doesn't get affected and continue to rise rapidly, they're going to continue to raise these interest rates, because if inflation is sticky, that's their main goal, is to bring it down. And if it's going up, that's a very big problem for them. So again, if we go back into the charts, this red line represents October 13th and the CPI data coming out. So in my personal view is every single time before these big news events, you see Bitcoin start to trade sideways and consolidate. And then there's big moves, right? It trades sideways and then a big move and then a big move. And what we've been essentially doing is been trading in this larger consolidation zone, and maybe we could get a larger move to either the upside or the downside. Again, a very important zone is, again, that seller's climax area right here at 17,500, or maybe we go up, break this high with good CPI numbers. So my personal opinion, if it's good CPI numbers, maybe we go up. If it's bad, we continue to go down because they're just going to be a little bit more aggressive in terms of raising rates. But that's everything I have for this video. If you guys found any educational value from it, make sure to like and subscribe down below and leave a comment of what you thought about the accumulation schematic. Is it correct? Is it viable? Or is it just completely off the table? But until the next one, see you guys then. Peace.